Welcome everyone to the Traction Real Estate Investors Association webinar. Super special. I'm super excited this evening to be introducing Stella Han to you with Fractional to talk about a fractional way of doing real estate investing. You know, a lot of people, you hear about fractional ownership, you hear about just owning a part of something. And Stella, I don't want to steal any of your thunder on this. What I'm thinking of is that a lot of times people come to us at our REIA events, online or in person. They say, "Hey, you know, it's hard to get started. There's a lot of moving pieces, or I'm not sure I'm talented at all the different elements, or it would be really great to partner up with other people in the same fashion." Right? We hear that kind of thing all the time, and so one of the perfect solutions is exactly what Stella's put together in terms of being able to invest as a team and to focus on what you're good at and make underwriting decisions together and own your part of the deal, kind of like you own part of stock in a company, or maybe like you own a fraction of a particular coin out there, as the case may be. So that's why we're excited to have Stella here, because I've not seen anything quite like this before, and I've not seen it handled as well as Stella and her team handled this before. So Stella, how are you?
I'm great. Super excited to share more. Excited to be here.
Awesome. So, where are you calling in from this evening?
I am from San Francisco.
Awesome. Cool. Well, we've got people usually from all over. I would probably have a more East Coast heavy group, but we do have people all across the fruited plain. So, um, I'm going to pass it over to you and tell us about fractional and tell us how we can learn to invest partially and get all the benefits of that.
Awesome. Well, I'm super excited to be here. Thank you, Tom, again for having me. And today, I want to focus on joint venturing, teaming up with other people, and how to do that through Fractional. So, a little bit about me. I'm Stella Han. I am the CEO of Fractional. I'm also a real estate investor myself. I started investing a little bit over 5 years ago, and I've been really lucky to have built my portfolio, my personal portfolio, to a little bit over 150 units. Started out with just the basics, single family, long-term rental, wanted to keep scaling. And now most of my time I'm focused on multifamily, kind of dabble across a lot of different things as well, from short-term rental, student housing, all of that. And primarily actually invest out of state in the Sun Belt area. Cash flow is really important to me. So my first market was actually Atlanta, and I've been able to grow that just, across the United States as well. But for me, definitely did not just start out with 150 units from day one. I would say, going from 0 to 1 was extremely difficult. As Tom shared, right? Like I also felt a lot of those struggles when I was starting out as well. One, from a capital perspective, buying anything in the San Francisco Bay Area is pretty much impossible, right? You need $1 million to buy a shack, and I, in no way had that kind of money. And I also did want to build a stream of income. I cared a lot about cash flow. That just doesn't happen in California. So I was hearing so much talk and buzz about out of state investing, felt really intrigued by it, but didn't really know what I was doing. And I wanted to invest in Atlanta, but I'd never been there. I didn't really know the neighborhoods. And I just remember like myself lurking on Bigger Pockets for like hundreds of hours every week, like trying to get all these different pieces of advice, like trying to figure out what was going on, and really felt a lot of analysis paralysis where I almost felt like the more I was learning and hearing from what other people were doing, the less sure I felt about like whether I would be making the right move. And I didn't want to, put all my life savings into one property and have that be, an absolute shit show and like lose all my money. And I was just really, really scared about all of that. So felt, a lot of just, frustration around how to pull the trigger. And eventually kind of found my breakthrough moment when I found a few partners just through different networking, groups that I was a part of, which is why I think it's so huge, just, what Tom is building here. And, found two partners who actually already invested in Atlanta. So they did have experience, and they were willing to kind of bring me under their wing where, the three of us went in on a property together. And that was such a game changer for me because one, I don't have to put all my capital into paying the down payment. I could start out with just 10K and kind of split the money with the other investors going in, and made me feel a lot more comfortable that I didn't have to lose everything in case this didn't work out. And the second point is really just, feeling like I was doing this with people that had experience, I felt like I got to, learn the ropes of investing while actually doing it rather than just, reading about it, and feeling like, I had other experienced investors who, had my back through this, right? So that's really how I went from 0 to 1, was with doing it with partners. And now as I'm scaling, with 150 units, I really think, finding and building a team is just the best way to scale. And, for the same reasons, right? One, I don't have endless capital. Like I will always get, tapped out, right? So if I want to keep buying, I want to keep scaling, I need to continue to find other partners who can work with me and bring their capital with me too. And, I also just think with a team, you really get to build something that's much greater than yourself. I think, everybody has their superpower, right? Something they really enjoy, something they're really good at that they should, focus on, that they should bring to the table. And then really find partners that have complementary skill sets as you, right? So for me personally, I love underwriting. Like I love pulling out the spreadsheets and just, pulling comps, crunching the numbers, all of that. But, when I went in on my short-term rental, I was like, oh my gosh, I have no creative brain cells. Like, I don't know how to do this. How does this work? And I ended up finding some partners that, had experience managing short-term rentals. They designed houses before. So on this bottom right here, you can see this property that I bought with some partners out in Houston. And we actually made it Travis Scott theme, which I thought was really, really cool. There was no way I would have been able to do it myself. So my partners actually went out there and they like painted murals and everything. It was honestly such a great experience. And that's really, kind of like a, the dream team is what makes it for you, right? So that's why, for me, I think with a team, it's really honestly one of the best ways to start and to scale. So that's pretty much, inspiration for why we created Fractional as a company is, we really want to help, build a community of investors who want to partner with each other, who want to invest and, build their wealth together and really just streamline a lot of, the necessary aspects of forming and running a partnership successfully. So, once you do want to invest, there's a lot of legal work that's involved, back office work, compliance work, right? So streamlining all of that to really create a one-stop shop for people to be able to invest with each other. So we built the company January of 2021. It's been almost 4 years already, which is a pretty big milestone for us. And we've been really lucky to have helped, tens of thousands of investors be able to co-own over $300 million in property value already. So that's, what keeps us, continue to be super motivated and excited every day to, build more and help more people. Been really lucky to have some awesome venture capitalists back our company as well. Fifth Wall, they're the largest VC in the space. We actually just announced our Series A last week. So that was a really, really big piece of news and really, happy to get that out there. We've also got Will Smith and Kevin Durant on the cap table, which is always really fun to share, kind of, naming a household celebrity that everybody is, familiar with. So lots of really great things going on. We want to help more people. And, I also want to keep this really educational and just we want to talk about, right? Like what even goes on in a partnership? How do you look for partners and, how does Fractional support that, right? So the first thing I want to talk about is, choosing the people you want to work with and how do you vet them, right? Because the moment you're doing business with other people, it's so important to have that piece of alignment. So, the first thing is really self-evaluating like what your long-term goals are and then finding other partners who share the same goals, right? So as an example, if I wanted to, focus on cash flow, if I wanted to, buy something that's I want to hold for a longer period of time, right? It would be so wrong if I started working with someone that's trying to get in and out of, a lot of different properties, operating on a completely different timeline than I am, right? So really evaluating, what your goals are and finding other partners who have that similar kind of goal. And then from there, right, evaluating expertise is really important. We talk about superpower, right? So whatever, you're bringing to the table, whatever your partners are bringing into the table, you want to make sure that, that is actually what they're great at. And, evaluating their risk tolerance is also really important. Myself as an investor, I am very conservative. So, investing with someone who is very aggressive, for example, in their underwriting would not be a great fit, right? So that's another pretty big aspect. The third one is just around like communication, working style. Some people are super communicative. They maybe want to chat every week to kind of sync up on what's going on. Some people maybe are a little bit more, laid back, right? Maybe monthly check-ins is enough. So even that kind of, communication preference is really important. And that's why, what we really encourage is this concept of like deal dives on the platform. And what happens is, people jump together, kind of like what we're doing now on a Zoom, and, we underwrite deals together. We underwrite opportunities together because that is honestly, I think, the best way to tell who someone is as an investor, right? It's like actually looking at a live opportunity and seeing how they think and if you can work with someone like that, right? So what I'm screen sharing right now is actually a personal project that I led. It's a 5 unit in DC, hopefully a familiar market to some of you. And this was actually my first time in the DC market. And I came across this 5 unit multifamily from another one of my investor friends, and we were kind of contemplating on whether it's a good deal, if we should buy it together. And from my initial number crunching, we needed 322K to buy the property, and I did not have that money myself. So I was like, what a great opportunity to like bring it to the community. Let's analyze it together. If it's a good deal and we all love it, maybe we can partner together on doing it together. So I hosted a deal dive, and pretty much what happens on a deal dive is, I basically have this project that's set up, and I'm walking everybody through, how I'm thinking about doing the research, and we're also researching it together live on a call. So given that it's my first time investing in the DC market, I'm like sharing about everything I'm looking for from like economic growth, major employers in the area, crime rate. We had some local DC investors on the call too, which was also really nice. Like I could get them to kind of fact check me on some of the stuff that I was researching. So that was great. And then, looking at specifics around the property, right? The bed bath breakdown, laundry, parking, all those things, schools, the neighborhood. And what I thought was really cool was on this call, because there's a lot of out-of-state investors too, we had Google Maps pulled up on Street View just to kind of see what the neighborhood looked like. And while we were doing that, we had an investor on the call notice that the DC Housing Authority building was actually right across the street from this property that we were looking at. And then he like unmuted himself and was like, oh, Stella, did you notice that, the DC Housing Authority building is right there? Have you considered like Section 8? Like, do you think that's a great strategy? And I was like, wait, I actually like never thought about that before. That could really make sense, right? Like as a way to stabilize the rental income. And that was like a pivot that we had, kind of like a lightning bulb moment, right? Like just from the call, which I thought was really cool. And pretty much we framed our entire underwriting around the Section 8 strategy after that comment. So that was really, really awesome. Looking over numbers, right? Trying to figure out what's even a good price for the property. We had different people call brokers to kind of get their idea about like, how would you price renovated versus unrenovated units? So that was also really, really awesome. And then, this is my favorite part, right? Because I love underwriting. We literally had this spreadsheet pulled up on the Zoom, and, we're like trying to figure out, with income, right? Like now with the Section 8 strategy, pulling the DC housing numbers, plugging that in, doing a bunch of research on like property taxes, repairs, all of that kind of stuff. So even from this, right? Like you can tell based off of, assumptions that I'm making or expenses I'm projecting what kind of investor I am, right? I think I'm generally conservative, and this is a newly renovated building. And I'm still factoring things like repairs and capex, right? Versus, maybe you have another investor who is not putting in any sort of expense, right? That tells you a lot about who they are as an investor and whether they're a good fit with who you are as an investor. So, that's why doing the numbers, doing these deal dives together is just super, super important. And, you get a really great idea about what kind of returns and what this potential investment could look like, doing this kind of discovery call together as well. So that's pretty much like how we came up with a lot of the metrics that are important, right? Whether it's the cap rate, cash on cash, what's the cash flow, what does, return on investments look like if you bake in some sort of appreciation. So that's, what we did on the call. And, lucky enough for me and all the investors, we really liked the deal. We felt really great about it. You can see here we had 15 investors end up pulling together 347K total. So that gave us a little bit of an extra reserve too, which was really nice. And, we ended up buying this property together. So that was definitely a really great kind of full circle moment, right? To show you guys what this could possibly look like. And there's like so many different opportunities people are underwriting. It's not just multifamily. It really could be anything. So, you have this group here. They're looking at like a private money loan, for example, and pulling their capital together to extend debt to a flipper. This is a much shorter timeline compared to, the multifamily one, which is 5 years, right? Like they're looking at 18% annualized returns, 12-month duration, right? So like in these calls, you got to figure out, is this strategy the right one for me? Is this person, the right person for me to partner with, right? Like if you want something that's quicker, you would not want to invest in that DC deal with me, right? Like we're clearly not on the same wavelength, where we don't have the same goals. So that's why like we love these calls. I think it's really a great way to build relationships, to practice your underwriting muscle, and then, eventually land at a deal that, you really like with partners that you want to do it with. So continue on from that, right? So say, you've been underwriting a lot, you started finding people you want to work with, and you actually want to move forward on something, right? What happens next? This piece I think is really important. It just goes again with like alignment when you're working with different people, is like actually defining who's responsible for what. So one way to do it is kind of having specific responsibilities for different investors. So for example, for my short-term rental, I want to do the underwriting, so I'm going to be responsible for that. I cannot go out to the property and paint the mural. I do not want to, manage the guest turnover or the cleaning crew or anything like that, right? So we have different people in our partnership that are responsible for different parts of, the business, right? So that's one way to go about it. And another way is kind of like an on-call schedule where, you can have different subgroups within your partnership be responsible for the entirety of the investment every month or every quarter, right? Like some sort of rotation schedule. And that's what, we're doing with our DC property, because like there's not necessarily like one specific person in a different role, because we do have a property manager and everything like that. It just made more sense for us to, every quarter there's two of us that are on call. We respond to all the property managers' emails. We look at whatever repairs and bids are coming up, things like that, right? So that's another way to do it, where it's like everybody is basically responsible for everything, but just on a different timeline to really split the responsibilities. So lots of different ways to be creative. You just really want to leverage, the skill sets of people in your group, the bandwidth, right? And just make it, a really great way to split the responsibilities and the load. And then with that, based off of how you're sharing responsibilities, that actually plugs in really well with how you're going to structure the ownership of your partnership, right? So the most basic way, which fits really well with just like everybody being responsible for everything on some sort of rotation schedule, you could just do the most basic pro rata ownership percentage, which just means like, you get your individual investment divided by total amount of money pulled together, right? So say total funds pulled together is 100K, I invested 10K, then I own 10% of the property and the partnership, right? That's the most straightforward way. And you can also get creative too. So this fits very well with partnerships where certain investors are, bringing something really special to the table. Maybe they're taking on more work, maybe they're taking on more risk, where, it actually makes sense to pay them a little bit extra, sweat equity, or maybe giving them a little bit more of, the rental revenue or the cash flow, for instance. So a really good example is, for my short-term rental, we were trying to figure out how property management would work. We had two choices. We could either, hire an external property manager and pay them 20 to 25% of our monthly rental income, Or some of our partners actually had experience self-managing Airbnbs already, and they were willing to, self-manage for our group and, charge 8% of the rental income. And we went with that because it was a no-brainer, right? Like, why would you pay an external property manager who, is not a fellow investor, who has no skin in the game? Why would you pay them 20 to 25% when you could pay your fellow investors who are in this business, who own this property with you, 8%, right? So that's like what we picked. And that's an example of like number two, where you could give, your fellow partners more, cash flow, more equity. Another example is like, maybe somebody is getting a mortgage and they're the personal guarantor for your group, right? They're clearly taking on more risk on behalf of all the other partners. So, maybe they should get, an extra 5 to 10% in equity compared to the money they're putting in, right? Because no one else is taking on the risk of the mortgage. So lots of ways to be creative here. And, whatever is decided, you absolutely want to bake that into a legal agreement, right? That is basically the foundations of a successful partnership, because everything's going to seem really great, especially when you land at that really exciting deal. Everybody feels really happy. Everybody wants to move forward, but you want to protect yourself. You want to make sure everybody is aligned. And that is really the foundations of a smooth sailing partnership, because you never know what can happen later on, right? So that's another big part that Fractional covers, is we actually have our legal team come in and create the operating agreement for all the partners that are working together. So I'm going to show everybody what an operating agreement guide looks like. This ends up being a 47-page document. It is really extensive, but it is just really for the benefit of everyone, right? Like, I cannot just like stress how important this is. Like, you want to absolutely be as transparent and candid as possible about all the good, bad, and ugly that can happen in an investment, in a partnership. Be aligned on how you're going to work through all those things upfront, so that, once you do, do a business together, you're prepared, right? Like, obviously everybody's going to hope for the best, but you want to be ready for the worst. And that's what, this legal operating agreement is going to do. So, things like ownership, right? We touched on that just now, to voting, right? There's going to be a lot of different kind of decisions that need to be made throughout the lifetime of your partnership. So, how do you have an effective structure where you can get the opinions of people, but still be able to, come to a decision quickly, right? Like, you don't want to just stall because there's a lot of partners and, miss a critical decision. So something that, we kind of suggest as a framework is kind of breaking down how important certain decisions can be, right? Something that is, not super important, maybe like buying insurance or, picking a property manager. It's still important, but maybe you don't need to sweat it and have like every single investor give their opinion, right? Maybe it's like, if just 60% of the partners think this is good, then the group is okay with moving forward. Something that's more serious, right? Maybe you want to do a cash out refinance. Maybe you want 70% of ownership to agree. Maybe you want 80, right? Like, all these things can be customized. That's why you want to talk about these things up front. To, the most critical, right? Selling the property. That's probably one of the biggest decisions you're going to have to make. Maybe you want close to everybody to agree, right? Before you want to sell the property. So a lot of different things like that. We pretty much have all the cases that can happen. You want to lay them out here, put them in the agreement. Something that could get really ugly is defaults, right? Again, important to really, really talk about upfront. You never know, right? There could be a chance where there's a capital call, in the lifetime of the investment. Say, roof falls over or whatever it is, right? There's not enough money in the reserve. Now, you need a capital call from all the partners to be able to fund a larger repair. What happens if someone doesn't pay their share, right? How are you going to go through that? So that's why, we want to have it in the operating agreement, where it's like, how many days do people have to pay for their capital call? If they're late, and another investor is covering their part, do they get a charge interest, right? What is that amount of interest? If they never pay, do they just get diluted in their ownership, right? Can they even get removed from their LLC, for instance? So all these things, not super fun to talk about, but you would rather definitely talk about them up front than like when this case is actually happening and like nobody is on the same page on like how you want to go about this, right? So that's what the operating agreement is about. It's really just covering everything that could possibly happen in the lifetime of your partnership, making sure everybody knows like this is the law of the land that we all agreed on, and this is going to be how we behave and make decisions together. So we're going to have our legal team work with all the investors who are doing a partnership together, create something that's customized based off of this framework. That's what everybody signs when they're, finalizing their partnership and making their investment. And then the very last part is just a lot of kind of back office work that happens and compliance work, right, throughout the lifetime of your partnership. By this point, you have your group, you're investing already. Hopefully you're already making some profits, right? So there's a lot of kind of accounting work, taxes that goes on behind the scenes that you just have to do every month, every year. So this is something that, Fractional covers as well. We do monthly bookkeeping for the LLC. We also automatically distribute all the profits, just pro rata based off of ownership to all the investors. So it saves someone from your group from having to, send out 10 wires every month, right? Like I'm sure that's very annoying and nobody wants to deal with that. So we're automating all of that. We also file the taxes for the LLC every year. We generate the K1s. So, it's simple for all the investors. They just take the paperwork, punch in their TurboTax, give it to their CPA. We're handling everything from an LLC level. And, you get a vote on decisions. You get to talk together in your private community as well. So really, this is, what Fractional is about. It's a lot of learning, a great community for people to look at deals together. Once you're ready, we're going to abstract away all the legal, all the back office. That's really important. And if, you're interested in learning more and, trying to figure out if this is something you want to be involved with, definitely book a consultation call. I think investing is something that's extremely personal. So, we would love to learn about you, your goals, see if this is a good fit. Tom has, spun up a traction REIA community on Fractional as well. So I would definitely encourage everybody to join that. Totally free to create an account. So, just come on, just check it out, see what's out here, and happy investing. And yeah, happy to answer any questions.
Terrific, Stella. That's awesome. I like the way it's set up because I can see so many people that would, look, I'm like you. There's parts I'm good at, the parts I'm not so good at. I wouldn't be out there painting the mural either. But I may not be the best guy for underwriting either. So there's parts that I would love to do, and there's parts I'd love you to do, and then we can find people to do the other ones. That's what I think works so well about this, is if you're not the jack of all trades, which usually winds up being the master of none, you can get a bunch of people that are really good at it and get them together and make that deal happen. Having been and still, a large part of my business in DC, I was very happy to see a DC deal. It was interesting to see how you pulled that together in that part of town as well and made that work awesome. That's great.
Yeah, thank you.
So I want to take some questions. So let's see, you guys can either put it in the chat or you're welcome to unmute and say hello as well. So let's see, I have Sachin says, thanks, Tom and Stella, for this interesting session. You're very welcome. David saying, excellent, Stella, well done. Articulate, informative, and encouraging. Thank you. Thank you. Like that as well. What other, any specific questions anyone has would like to, again, you're welcome to unmute and we'll happily have you ask your questions directly.
Stella, thank you very much. I really appreciate how you articulated each slide. One of the elements of fractionalizing is looking at securitization, meaning once they buy shares, then have you considered, like some of our guys have an OTC on NASDAQ in which they can place that asset there and they can continue to have it appreciate in value. And so I only share that because on the fractional element, they are encouraging us to then step forward in drawing to the table additional share holding. Does that make sense?
Got it.
Yes.
Yeah. Are you suggesting like have we thought about basically kind of like an IPO of each partnership? Is that what you're referring to, David?
Yeah, just taking the LLCs, the asset, and putting them into one. We have a friend that does that, and so they attract people to put their LLCs there or their assets within that.
Got it. Yeah, I mean, I think that's certainly intriguing. Right now, we're definitely a lot more focused on, how to build a community of people that want to transact together and operate that more of as a, joint venture. But, I think especially if, your specific group is interested in, having maybe more flexibility, liquidation, whatever it is. Yeah, I think it would definitely be something that is super interesting to explore. Yeah.
The fractional idea is excellent because people from high school all the way up to retirement can participate.
Yes, exactly.
And even give them as Christmas gifts, pieces of cloth.
It's never too early. I love the Christmas gift idea.
Okay. Well, thank you. Yeah. From San Francisco, San Diego area, we're there often, and I have a chance to practice where I went to elementary school in Taipei. So,
Oh,
yeah.
Very cool. Love it.
Yes. Thank you.
Awesome. Thanks, David.
Oh, Tom, I think you unmuted yourself, or you muted yourself again.
So I'm having an issue with all my buttons. I used to keep Zoom super simple. As soon as I went complicated, I'm regretting it. Not totally, but almost like. So tell us about the community. So when people use that link, tractionreal.com/fractional, it's going to take them to the fractional community. What do they get in there? What's the benefit of doing that? Why should they do it even if they just want to explore and they don't know exactly what they want to do yet?
Yeah, well, the community part, it's really about, being able to build relationships, right? Like to form a partnership, it all starts with building relationships with people. And, you have to go through the effort of, trying to meet other people, learning what they're up to in order to, find out who's going to be the right partners for you, who's going to have the, investment opportunities that excite you and how you're going to work together, right? So I'll show everyone another community called Accelerate. And this is a community that we run as a company for investors that want to look at 3 to 4 different deals every week, right? And there's a lot of different REIA members just across the states in this community as well. But you can see there's so much just collaboration, right? And so much relationship building that is really the foundations of, building a partnership together, right? Like you can see people introducing themselves, Aliana's from the DMV area, right? Another great sign for everyone here. And, tonight, like we're doing an event where, we have another community member, Khalif, who's been doing really beautiful luxury flips in LA. He's going to come and like just share with everybody, what he did in his last flip, things like that. We had Gina, another community member, she was on a few weeks back. She brought her general contractor to kind of walk through everybody, like how do you even estimate how much like different pieces of a rehab will cost, right? So that is really the beauty of a community, is like you don't want to just invest in a deal without knowing anyone, right? Like that is, I think, a dangerous and a very conservative play. Like what you should do is like be in here, like see who's out here, right? Underwrite deals with different people, learn together. And then you become really sure, right? Like, oh, wow, like I love how, like Subi talks about her deals and how she thinks about things, right? Like I think I would do really well partnering with her. Right. So that's why I think the community is really the basis to, be able to kind of take that to the next level, which is actually forming a business partnership with someone to do real estate investing.
Got you. So people that go to that link, set up a free account on Fractional, then can start to peruse what's out there and read all this research, see the different deals in play, see which ones they're personally comfortable with. And then, like you're saying, the personalities of each person and the work style comes out through their posts is what they're saying. When you find someone that you kind of jive with, and follow them more, see if you like their deals, and that those might be the ones you partner with.
Exactly. Absolutely.
Okay. Oh, that's interesting, because there's a lot of, I mean, particularly your neighborhood research information and the way that was done, and the way you guys were looking at it, the stuff that you were showing on the screen before for that DC deal, that it's excellent. I think that's a great way of understanding how are other successful investors looking at it, what caused them to realize this was a successful deal, and being able to see all those numbers. I think everyone can get their own personal comfort level up and then jump into a deal that makes sense. And is there a minimum amount needed to invest?
Yeah, that's a great question. So completely free to make an account, which is why you all should make an account and join the Traction REIA, right? Because you literally have nothing to lose, only benefits, right? You can learn so much, you can explore so much. Once you are ready to invest, it is a $5,000 minimum investment. That is really what we think is the bare minimum to actually feel like you have ownership and you have skin in the game, right? And a direct say in your partnership as well. So that's the minimum. Generally across the platform, it is going to vary, each deal as well. So that's like something you do want to look for. The reasoning behind that is, for example, for me personally, I'm totally comfortable just working with a lot of partners, but not everybody feels that way, right? Like sometimes people might only be comfortable working with like 3 or 4 people. If that's the case, then the minimum might be a little bit larger, right? Just because less people, same deal size, for example, right? So yeah, generally 5,000, but do look for every project to see what the minimum is for that.
That works. Now, Stella, Roy is asking a question in the chat, and he's being very, very upfront there. He says, look, I feel kind of lost here. Is Fractional a community builder, an investment group, a services company, or what? And I think that's actually a very good point, because you've merged a whole bunch of different, it's overlapping circles, isn't it? But you're that sweet spot in the middle. So what do you think?
Yeah, that's a great question. So if we wanted to create like a super short one-liner, then the focus is we are a company that helps people joint venture together on real estate deals. The reason why there's so many different aspects to it is because we feel like the best way to joint venture is creating a community where you can actually find the right partners and the right opportunities you want to joint venture on, right? Like that's what the community is about, is it's really just a method for you to be able to find the thing and the people you want to joint venture with. And once you do that, there's obviously a lot of logistics that go into actually running a joint venture, right? Like the legal aspects, the back office. So that's what we're going to streamline for you.
Okay, awesome. And Lynn's asking, she says she joined the Traction Fractional feed. How does she join the accelerator feed? Because she's really interested in that too.
Yeah, let me drop it in the channel. I have so many tabs open. All right, there we go. So this is the Accelerate community. This one is a little bit different. This is actually for, super committed investors that do want to underwrite 3 to 4 different deals every single week. So, see if this is you, right? It really depends on kind of what your goals are at a specific point in time. For this one, we do have a $25 a monthly deposit. And that's really just to make sure like everybody in the Accelerate community is serious, because everybody here does want to invest. And the way that it works is instead of a monthly fee, it's a deposit, because your $25 will actually roll into your investment when you do invest within 6 months. So that's basically how we kind of keep it free, but then still have some accountability.
Gotcha. Cool. All right. Now Flora is saying exactly what I need, and thank you, Stella and Tom. So you're welcome, Flora. Carolina is reminding us that you guys are going to be in the DC area at one of our in-person beer and real estate events. I'm sorry, that's not on the December 8th. That's not a beer and real estate event. That's at the Home Depot Design Center. So mark your calendars for that. We'll be having a lot of information out there as well, and you'll be able to meet Fractional in person. L'Oreal is asking, how does Fractional compare with syndication, other than the amount of money needed to invest or being a certified investor?
Yeah, great question, L'Oreal. So Fractional, what we're helping people set up is a joint venture instead of a syndication. So the main difference is that for joint ventures, essentially everybody is a general partner in the sense that everybody has decision-making power, right? In a syndication, what happens is you usually just have a couple people that are the general partners, and they call all the shots, right? With how the property is ran. And the LPs, the limited partners, are accredited investors who are really just capital partners. All they're investing is the capital to a very, very large deal that is ran by the general partners. For a joint venture, which is what we're doing on Fractional, everybody is a general partner in the sense that, you get to make decisions together, especially if you have a specific role. That's obviously what you're going to be responsible for. But at the very least, it's a lot more active. It's a lot more collaborative, because you're a direct owner and you're partnering with other direct owners to run this property. property. And because it is a joint venture, this actually opens it up to a lot more people. You don't have to be accredited to be in a joint venture, right? Because anybody can own a house. So anybody can be in a joint venture. So that actually, really brings a lot more accessibility as long as, you're willing to be collaborative and active with your fellow investors.
Cool. Awesome. And Lynn's sending us thanks. L'Oreal is also saying, okay, awesome. Thanks for the explanation. So super happy you guys got the perfect and understood. Lynn is adding in as well. So that's awesome. Any other questions, gang? Go ahead and type in the chat. Stella, anything we missed? Anything else that you want people to know about?
I honestly think we've covered it all. I'm trying to think. I feel like everyone had really great questions where, like the most like tricky ones. Oh, here comes another one.
Max number of investors in a single joint venture.
Yeah, that is a fantastic question. So the legal maximum is 100 people. We have never seen that happen on the platform. You can just imagine how chaotic that could be. I would say like usually people fluctuate between like 5 to 10 as a good sweet spot. We've seen groups of like 25 as well. It really just breaks down to like how much work is involved, what's a really great way to kind of like set up responsibilities and things like that.
Gotcha. Okay, that works too. Awesome. Yeah, I didn't mean to corny with the what else should we know? That's almost like an Amway question. Who else should we talk to? What else should I know? But sometimes you'd be surprised. You go, oh, there's one more little element. But I think that covers. Me personally, I would jump in the community. I would check out the deals. I think there's a lot to be learned just from going through the way people have thought through other deals. I think that will make you understand underwriting, understand the thinking patterns, the thought patterns behind it. And that's going to be really beneficial to people. So I would register for that community, jump in. There's no cost. Take a look. If it's something that makes sense, then maybe you'll do a deal in the future. It's awesome that way. David's adding in the chat, Stella, is it possible for an investor to bring a property to the team for them to purchase through fractional structure?
David, do you mean like you have a property that you want to sell or like wholesale or something? You're seeing if a group of people want to buy it together. Is that what you mean?
Yes, not like a REIT and not like a syndication, but making it available, even in a element of completing the purchase. So it's a way of not opening up as a larger fund, but bringing it to the table and asking if they want to participate in a fractional relationship structure, funding structure.
Yeah, you can definitely do that. So similar to, how I like spun up my project for the DC multifamily, right? Like if you have an idea you want to find partners for, you can definitely, create a project, share it with the community. We actually have our director of investments work with people that want to be project leaders one-on-one, just because, how you talk about your vision, right? How you want to do underwriting, even lead a call. It is a very different muscle than kind of just doing it solo, right? So we want to make sure people understand that process. So we'll actually, work with you one-on-one to set that up.
Yeah, thank you. Even to bring the property to the fractional team and say, here, you all can then distribute or invite.
Yeah, exactly. Yep.
Yeah, that's cool. That's a nice tie-in with existing deals or other deals, or how to expand out or how to meet that last chunk of money that you're looking for an investor. Bring it to the community. I like that.
Tom, because you mentioned like what else have I not covered yet? I just thought of one last thing.
Oh, see, it did work. It triggered something.
Because David was talking about like how do you bring your own idea? How do you bring your deal? I wanted to share this one that is a little bit unique because it's not a equity kind of partnership. It's people partnering together to extend debt. And what I thought was really, really fascinating is that they're not partnering together over a specific, note or address yet. They're actually just partnering together on a very specific criteria, right? So that means you can actually start with something a little bit broader than like a very specific address, right? So for example, Alexis Morgan, she is the project leader for this. She, lends money based off of a very, very, very specific criteria. And because her deals move super quickly, it doesn't really make sense where like if she only brings this to the community once she actually has the property, because things will just move so fast and like people will miss out on this. So what she did was like, hey, you know, I specifically lend on single family homes in this market. It has to be first position, you know, 10% annualized interest rate, 6 months or less, right? Like it's a very, very specific criteria. And people actually pull together, you know, 200K, right? 12 people did. So now, you know, they basically have 200K of deployable capital, right, over this very specific criteria. And then now all that needs to happen is, you know, Alexis, who's the project leader, she just needs to find an opportunity that fits this criteria. And whenever she does, you know, the group votes on it like, okay, you know, we do think this investment, it does fit, we approve, and boom, right? Now you already have the capital that's all pulled together and you can just deploy it. Yeah, so that's another really like fascinating way that we've seen people work together on the platform.
So she basically put together a shopping list of what's needed, and people say, yeah, I would, if you're able to find something that fits those, I'll jump in on it. And so as long as they go and find what they said they're shopping for, then you've already got the team together. You've got the money team together to invest in the deals and make them happen.
Exactly.
Well, that's creative too. I like that. Yeah. All right. Lots of different ways to make this work. I like it. It's Stella, what I like is it's modern. It's taking like the right kind of modern approach. It's fractional. I know pun is intended there, right? Because you know, it doesn't need to be everything, but you know, you don't need to be doing it all, and you can find people. And sometimes people, well, where do I find people? Well, they're also on the platform, so you'd sit there, work, and you get to know them and approach them on there. And I think that's pretty cool. Now, Von Mitchell's asking, does this also include commercial property, apartments, hotel, etc.? And I'm pretty sure the answer is yes, because you were showing a borderline commercial property in DC. But go ahead, and what else do you?
Yeah, we're asset agnostic as a platform. It's really just up to whatever you want to do and whatever, you know, other investors in the community are interested in.
So if I want to jump on there with and say I want to get a team together to do 150 unit plus apartment buildings, that's cool.
Yeah, that's totally cool. We
If
have
I say I want to invest in small hotels in the Midwest on major interstates, that's cool.
Yes.
Okay.
I just talked to someone yesterday who wants to do a little mini kind of boutique hotel. So yes, everything is cool as long as, you know, other investors also want to, you know, pair with you and do that with you.
Sure. Well, I guess at the end of the day, you could, I don't know, you could put up something about a hamburger franchise. If nobody was interested, it's not going anywhere. So in some, you could be testing out your idea, and you know you're going to find people interested in real estate deals of all different shapes and sizes. But if you can kind of test that thought, and it's not the end of the world to get struck down on an idea, because then you're going to go, all right, let me refine that. Let me find the criteria that is going to work. That's maybe another kind of hidden use of the platform that I like.
Absolutely. Look at this. This is exactly what Noble's doing. He asked if people are interested in this, you know, small multifamily, right? Like, and he got a lot of great responses, which is a great sign. So yeah, there's definitely no harm in asking, right? That's the point of the community, is to, you know, test and validate your ideas.
Gotcha. And David's also asking, I guess with the overseas component, can investors from Dubai participate if they contribute from within an LLC that's within the USA?
So as long as you have either a US SSN or an ITIN, you can invest. What we just need to do is like be able to report you to the IRS, because, you know, Uncle Sam is going to ask for that information. So as long as you have that, then you're good to go.
Okay, so social security number or the corporate ID number.
Yes.
With the IRS. Okay, cool. Very good to know. All right. Well, then I think if we don't have any more questions, I would do it. Let's we got the QR code on screen. Some of you have asked about a replay, Stella. We didn't actually discuss that. Are you okay if I put the replay out?
Absolutely.
Consider it done. So once this processes, I'll hand it to the team. The team will get it up and running. We'll email it out. So yeah, if you've been on the call, want to go over this again, that's an excellent idea. And then I know there's people that were unable to attend even though they registered. So everybody, you'll have it on the replay as well. So cool. All right, Stella. So we'll go to tractionreal.com/fractional. Join that fractional community. Get in there and look around and poke around in it and get to know it and get to know some people, make some friends, and it just might be the spot that your next good deal comes from.
Love it. Well, hope to see you all there. It's going to be a lot of fun.
Thanks, Stella. Thanks for everything. Take
Have a
care.
great night, everyone.
Bye.